Hi, good afternoon. Ross McInnes from Australian Investment Research Services. Another negative day on Asian and Australian equity markets. The sentiment remains very poor, and this was aided by some more sabre rattling by the Northern Koreans this afternoon about the potential to go to war against South Korea. And although that's very unlikely, obviously at the moment the market sentiment is still very poor and took this on board. The sell-off was pretty broad-based in Australia. The BHP down 4%, ANZ down 3%, and just continuing this last month of selling, which accelerated this time last week, and it looks to us that the Eurozone in particular, and probably the G20, need to get together and really come out and show unity in the face of this current, in this latest sell-off, which is deeper than the previous ones with Dubai. Late October last year, and again earlier this year on the first sell-off on the banking regulation rules in the States. The sell-off in Asia, though, was also accelerated by the US S&P 500 futures, which fell aggressively sort of around 3 p.m. Sydney time, about 2%, and they're suggesting the market's going to open at 1050, which would be a 5-month low for Wall Street. So again, in reflection of this, the Australian dollar has also found itself under renewed pressure. Spent most of the day at 82.20 after opening at 82.40, but again around 4 p.m. Sydney time, as Europe sort of came into the market and saw what was going on, the Aussie was sold off and currently just sitting at 81.10, just above Friday's 10-month lows at 80.80. We still expect the RBA to test and smooth the market as it did last Friday. As a very sudden or quick move through 80 cents could really hurt business confidence at this point. So we look for an interesting evening ahead. The key focus will be on US consumer confidence data, which comes out after 12 p.m. tonight Sydney time. The market's looking for a reasonable number, about 59, and the interest is whether the current market shocks filtered into consumer expectations versus this very strong payrolls number at the start of the month. So overall, markets at very key levels. We're getting, as we opened the analysis at the start of the week, we suggested that if this continues for another couple of weeks, this sell-off, that we are going to get a real economic shock. So we strongly believe that there is a need for the G20 to come out and massage market fears and concerns. What shape this takes is obviously still to be developed, but the EU has started a little bit of jaw baiting this afternoon, saying that the tighter fiscal policies won't harm growth into the medium term. So thanks very much, and have a good evening. Bye-bye.